Brief exercise 4-12 is classified balance sheet accounts. So what they're asking us for is to identify the non-current assets and prepare the non-current assets section. So I've set up the title. So again, this is a balance sheet. So there's always a 3-line title for financial statements, the name of the company, Odom Company, what it is, it's a balance sheet, and then balance sheet is a snapshot for a point in time. It's for as of December 31st, 2017. We're then going to look at the non-current assets. So non-current means beyond, we're going to use up beyond 12 months. So they're long-term assets. So if we go through their accounts, supplies we tend to use up within 12 months, so that would be current, so we won't include. Notes payable are items we owe, which are liabilities, so we wouldn't include in non-current assets. Accumulated depreciation for equipment, we're going to include, it's part of our long-term asset equipment. Accumulated depreciation building is related to our long-term asset building, so we'll include that. A notes receivable long-term, it's due in April 1st, 2018, which is due within January, February, March, April, 3 months of the year end. So that would be a current asset, so we won't include notes receivable. Land, building, patents, goodwill are all long-term non-current assets. We use them up over a longer period of time than 12 months. And then we expect to use up within a year, so that's a current asset. So now that we've identified our current and non-current assets, we're going to set up our non-current assets section of the balance sheet. So we always start with property, plant, and equipment. I like to start with land because it's a non-depreciable asset, which means we don't use it up. There's no useful life of land. It's indefinite, right? Land is there forever. So our land value is $85,000. We then have our building, which is $125,000, but we're going to recognize that there's accumulated depreciation related to the building of $37,400. So we've used up, out of the $125,000 building, we've used up $37,400. So we've depreciated that much of the building. So the net value of our building that's left is the sum, or 125 minus 37,400, which is 87,600. So that's what remains left of their net book value of our building, the cost less depreciation. We're then going to do the same for equipment. Our equipment cost us $43,000, so we include our equipment, but we have accumulated depreciation of $25,800. So the net book value of our equipment is $17,200. Now you don't have to make your accumulated depreciation negative. You could keep it as a positive number and then just subtract the two. When I'm working in Excel, I always like to put minus signs, so I'm always auto summing. That way if I change the direction of something, I now have to add it instead of subtract it. It works. I've just set it up to always add. So accumulated depreciation is a contra account because it's the opposite direction. It's a credit balance, where it's related account equipment's always a debit balance, so it's called contra or opposite, and the net of the two is the net book value left. Okay, so equipment and its accumulated depreciation are always happily married. They're always beside each other. So you have building, then right below it you have the accumulated depreciation of the building. You have equipment, then it's happily married to its accumulated depreciation. It sits right below. So they're always sitting together on the balance sheet. So that is our total of property, plant, and equipment. We have those 3 items, so I can add up the 3 items to get my total property, plant, and equipment. I then have intangible assets. These are assets that I can't touch but still exist. And in this case, I had a patent. So patents are things that prevent other people from copying your item, right? So you'd have a patent. If you invented something, you'd create a patent so no one else could copy what you did. So in this case, they have patents of $12,300, and we show those net of any amortization. Finally, we also have goodwill. So goodwill arises when I purchase a business and I purchase it for more than its assets are worth. So I'm saying there's something of value in that company beyond just their assets, whether it's the name or something else. So these are things I can't touch or feel, but they are assets that we record as intangibles in our non-current assets section, which gives us our total non-current assets. I can add them up of 200,620. Now in terms of formatting, I always put a $sign at the top of each column I've used. Okay, I can put a line item. And I can double underline the end, just saying it's the total of this. It's not the total, usually it's total assets. But we'll put a $sign on there, showing our non-current assets. So that's our non-current assets section of the balance sheet.